Hi everyone, this is the Secretary of Sundarbans House, Anshuman Basin, and today we're going to talk about bubbles, euphoria, and market crashes throughout history. So let's just start with the very first famous one. Hold on, let me open it up. So we're going to go all the way back to the 1600s to discuss old bubbles. So the first famous one was the Dutch tulip bubble. So I can actually present my screen over here and you guys can see what I'm seeing. Hold on. Okay. Okay. Can you guys see my screen?
Yes.
Yes.
Okay. Cool. So the first famous bubble was the Dutch tulip bubble. So it was basically just a mania behind uh, tulips. Okay, like actually the fucking flower. Okay, the tulip flower. Uska basically low price. It started like rising like crazy, and anytime basically anything we basically have anything hold on, I'll have to admit a few people. Yeah, cool. So anytime such a thing happens, there is such a situation where the price of any object or an asset class is going up like crazy. People want to pile in, right? Like for example, like in the last decade, basically just because Gurgaon is right next to Delhi, Gurgaon's property prices skyrocketed, and then in people still keep buying up houses in Gurgaon, thinking they'll be able to sell them at 10 times the price in the next 5 or 10 years. But that's not going to happen. That one decade was actual demand, and now it's actually speculation. So basically anytime the price of anything keeps going up, people want a piece of that action. People are like, okay, tulips ka price upar ja raha hai, let me go buy tulips and try to sell them on to the next person for a higher price. So it had gotten to the point that basically tulip bulbs started to cost as much as a house. It had gotten to such a point. Like for example, you can say what's going on with Bitcoin right now, but not debating whether there is utility in it or not. But yeah, so basically like that. So it had gone. It had amazingly. It had gone up, and then again, like all such uh, like wherever unsustainably prices go up, you eventually have a crash, like a flash crash, a correction, a downturn. And that basically not just affects that particular asset class, it basically induces a sort of recession in society in general. Because when you're invested in tulips, your neighbor is invested in tulips, your mother, your brother is invested in tulips, and you all lose your money. Basically everyone loses money, and everyone's poor for the next, for the foreseeable future. So that was the first famous bubble that happened. And we're discussing only 1600s because throughout history, usually the only asset class that people have trusted like this is gold. And then again, people have actually used gold as a currency, so its price has gone up and down. And then also, but then with there it was, since it was actually used as a medium for exchange, its price going up was not much of a problem. And also okay, and then also like you know how in Hindi we say phuti kaudi. So that's actually like it's a cowrie shell, all right. And that shell basically used to be used as currency in ancient and medieval times. So like that seashell was very rare, and because it was rare, it was used as currency. So basically, and also in various parts of the world, basically in ancient India, cows were used as currency. Like you look at old trade documents, they say somebody's paying this much for these many cows for this much. And not just in India, around the world, people used coffee beans, jelly beans as currency. So like, hold on, somebody has said something off the topic. Want to understand NFTs? If somebody has got some insights, sure, we can discuss NFTs. uh, but like once we're through with this discussion, we can discuss NFTs. Okay, so let's get the main agenda out of the way. We're discussing what basically, and I think what's happening with NFTs right now is also a good example of what a bubble is basically. So the bubbles basically operate on the greater fool theory. So this is a concept I got from Seth Klarman, although it's been around for much longer. Seth Klarman is a famous value investor. He wrote this book, which is now like a legendary book on Wall Street, and a single copy of that book costs basically $5,000, and it's very hard to get your hands on that book. But amazing book. I was able to get its PDF. If anyone wants it, let me know. So he calls it the greater fool's game. Basically, what happens is you buy something not because it has value, but you buy something just so you can offload it to another person a year or a month later for a higher price. All right. Basically, जो तुम चीज खरीद रहे हो, it's absolute shit. All right. उसमें कुछ कुछ utility नहीं है, but you're overpaying just because you know that 1 month later, because you think 1 month later somebody will overpay even more. So basically, that circular logic can fail at any point of time. At any point of time, people can be like, okay, you know what? I don't want to pay how much a house costs for a fucking tulip. And then basically, when these things happen, a bubble bursts. Okay. Then in 1720 we had the South Sea bubble. Okay, so this was basically England. All right, in London. All right, so there was this company named the South Sea Company, and again, they basically wanted to replicate the East India Company's success. So the East India Company was super successful. They came to own not just the spice trades, they came to own countries. So like people basically anticipated that the South Sea Company will become a company like the East India Company, and they're going to own countries by owning having ownership in this company. And they kept bidding the price of it up and up. And then again, since the South Sea Trading Company could not become an East India Company, and it never was one to begin with. Basically the stock crashed and people lost lots of money. So just like that throughout history, like I'll quickly go over all of these examples because I think at this point you guys see a common pattern. Do you guys see a common pattern here? Does anyone want to say anything? Do you guys notice a common pattern here? Okay, so the common pattern here is that basically people are paying enormous, excessive prices for absolute shit. All right, and basically when shit hits the fan and people realize that they're paying enormous amounts of money for something that's absolutely worthless, basically the whole thing ends in tears. All right, so again, Mississippi bubble, this is in the 1719 to 1720. France tried to inflate away debt by printing money and issuing shares to the Mississippi value, triggering a speculative frenzy. 1840s railway mania. Disruptive rail technology sparked speculation in British railways. So this is just like the dot com bubble. The dot com bubble basically happened in the 2000s. So basically in the 2000s, what was basically happening was every fucking company with a dot com at its end, like for example pets.com. Actually, Amazon.com was also one of them. But basically all these companies ending with a dot com, with no revenues, never, not even a single prospect of ever earning money in the future. These companies IPO'd, and people basically took their prices up 100x, 200x, and it was crazy. It was crazy. Within a few months, these companies were trading at very rich valuations, and the ground reality was that these companies were actually shit. With the exception of a few, there were great companies like Oracle, Amazon, all right, which were actually great companies. But then the bubble had inflated their price so much because people were like, okay, this is the next big thing, I got to buy these shares. People kept piling up on these shares. Someone here. All right. So people kept piling up on these shares like they're the next big company. All right. And so this is basically what was happening in the 1840s. Railways are basically a revolutionary technology. All right. They were what the internet is today. Railway was for the 1840s. So it was pretty obvious when people saw that how much potential the railways had, and how many overnight millionaires the railways made. People obviously wanted to pile in. People kept buying and buying, and then again the railway stocks basically crashed. Okay. And again, 1920s. All right. So basically the 20s were the 1920s in America were called the roaring 20s. All right. So if any of you have seen the movie The Great Gatsby, all right, so that's basically set in that particular period of time. That was like a period of extreme optimism and extreme euphoria, where people were very like people were very optimistic about the future of America, and like all of these great inventions and all of these great companies were basically going public. And so for example, so all of these companies were basically their stock prices kept rising. All right. And again, there is only like there is a sustainable limit to which the price of something can keep can can rise to. And then after that, people are like, okay, like this is basically overpriced, this is like wildly overpriced. And then that's basically when the bubble bursts, and there's a uh, and that basically led to the depression in the US economy at the end of the 1920s. Okay, again in the early 1970s, this is again a Nifty 50 here does not mean the Indian stock market's Nifty 50. This is actually the top 50 high flying stocks of the New York Stock Exchange. All right. So basically, people at that point of time had basically devised like a simple rule of thumb, which was like, you don't need to invest anywhere, just invest in the Nifty 50, and you'll become very rich. All right. And anytime any such mechanistic formula comes into play, again, the settings are already like they're like the environment is ready for another future stock market crash. And then again, Japan in the 1980s. All right. So the 1980s were an amazing time for Japan. Japan had industrialized, and actually in the 1980s, the top 10 companies of the world, the top 10, the top 20, the top 50 companies of the world, like right now, they're all dominated by American companies, right? Like the Apples and the Googles of the world. But at that point of time, Japanese companies had come to dominate the world, basically. All right. And people kept buying these shares, bidding their price up. And then there were people were really like optimistic about Japan in general. Like they thought Japan is going to become like the next America, basically. And basically their real estate, their stock market, everything became like a highly inflated price. Hold on, I gotta admit someone. Rishikesh Rane. Yeah. Okay. someone else here also. Okay, not able to admit this person for some reason. I don't know. Okay, it's okay. We'll keep going. Hold on. Hold on. Let me try opening this meeting link again. Hold on.
You are on mute.
Okay, you can you guys hear me now?
Yeah, you're
Yes,
audible.
yes.
Yeah, sorry. Okay, so again, like we were just discussing, in the 1980s, people were really optimistic about Japan's future. All right, not just Japanese stocks, which I already told you. They were like they dominated the top 10, top 20, top 50 companies of the world. They were all filled with Japanese names. That's no longer the case, by the way. All right, in the this was also in one of the actually just last year's Berkshire Hathaway annual meeting. Warren Buffett was presenting a presentation, and he was just talking about how, like in the 1980s, all of the top 10 companies, with a few exceptions. I think that there was Ford, and there was just, I think there were two American companies, and the rest of them, all of them were Japanese. All right, so Japan was really dominating the world at that point of time. So people obviously, in any particular bubble, basically there's definitely a shred of truth. All right, Japan really was dominating the world at that point of time. Since people were really optimistic about Japan's future, they kept on buying real estate in Japan. They kept buying Japanese stocks, and they kept bidding the price up and up and up and up. And like it says, at the peak in 1989, the Imperial Palace in Tokyo was valued higher than California. All right, so the Imperial Palace in Tokyo, that one palace, the property rate for that one palace was higher than California. All right, so that's like madly overvalued. All right, and then subsequently, like all of these such euphoric bull runs, basically the market and the real estate the stock market and the real estate market crashed. All right, so again, in 1991 the bubble burst, and it basically ended in tears. And by the way, Japan has never recovered from that bubble. Their stock index is exactly where it was 30 years ago, 35 years ago. Japan is still where it was 35 years ago. They've never recovered from this bubble. All right, and you can attribute that to many factors, also their aging population, and also the fact that people over there aren't getting married and having children. That's definitely one factor. But where Japan was 30 years ago, it's still there right now in their stock index. It hasn't risen. All right, so that happened again 1990s, the dot-com bubble. All right, so again, like I told you guys, all these bullshit companies like pets.com, houses.com, people basically just created a company with a dot com at its end, just hired some investment bankers and took it to IPO. And then those companies that basically were not profitable to begin with and had no prospect of ever earning a profit were IPO'd, and they were given really, really rich valuations by the market because everyone was seeing these prices rise like crazy. Like, let's say, for example, Kunal is my neighbor and he invested in some company named, let's say, for example, candies.com. All right. And candies.com goes 2x in just 1 month. I'm like, holy shit, I'm missing out. Kunal just doubled his money. I need to double my money. All right. So basically, this is how the conditions are set for all stock market bubbles. All right. When there is something, some basically like a subpar or a bullshit, sometimes even a good product at core. All right. And its price Kunal says yes, sweet candies, 100% recommended. All right. So basically some product like that. All right. And basically people keep bidding up its price to unsustainable levels. All right, where you cannot really justify its price. All right. So that happened. And then of course in the year 2000, this stock market bubble crashed, and it ended in tears, like seriously in tears. All right. Like, okay, this speculation in the new economy tech stocks, Nasdaq soared 100x over the decade. This has never happened in a 10-year period. It has never gone 100x in a 1 year period. All right. So this is like you can say uh you can say the nifty 50 or the nifty 100 of the Indian stock market in just a 10-year period going up 100x. Basically anyone who's invested in the index has made 100 times their money. All right. So again, never happens. All right. Went up 100x over the decade, peaked in the year 2000, and then crashed 80%. All right. So, like, seriously, this thing ended in tears. People lost their homes, people lost their life savings, as happens in all bubbles. All right. So, and then again, the late 2000s, this is basically the conditions for this started brewing in the early 2000s. And this really, like, this happened in the year 2008. And I think, like, if you guys have seen that movie The Big Short, that's basically about the housing bubble. Has anyone here seen that movie? Okay, no one, I guess. So
I've been recommended to watch it a few times.
yeah. So okay, Sanjeev has seen that movie. So The Big Short has the Batman guy, and it has Steve Carell, lots of great actors. Then it's basically about what was basically happening at the time of the US housing market. All right. So basically, at that point of time, what was happening was that the banks realized that they made an assumption. All right, they made an assumption. They're like, um, okay, so anytime a bank basically gives out a loan, right? It looks at your credit worthiness. The bank basically wants to make sure that it earns its money back. All right. And usually, like, a good bank has an NPA, which is like a non-performing asset, which means they weren't able to recover the loan, of usually about 1 to 3%. That's a good bank. All right. That has its affairs in order. All right. So basically at that point of time, people were like, the bankers were like, we don't need to be so conservative. Let's just give out loans to every single person that's asking for it. And then what we can do is, there are large institutions that will buy the risk off of us. All right. So there are hedge funds that will be like, you know what, we're paying you X amount, which is less than the recovery of the loan, but then we're paying you that amount right now so we can recover that loan later. So it's like a win-win transaction for everyone. And so this way, the banks, to extend their own profit, they started giving out loans to everyone. All right. Okay, so let's say there is someone. All right. And I don't want to sound like a shrewd capitalist pig, but let's say there is someone who earns 5 lakhs a year. All right, there is someone who earns 5 lakhs a year. is it wise for me to give him a loan worth 20 crores? I know I'm never going to get that money back. I'm never going to get that money back. But then the banks had found institutions. These were the big names of the world, like the Goldman Sachs, the Deutsche Banks, Credit Suisse. All of these institutions, they were willing to they were willing to buy the risk off of these people. Lehman Brothers, Citibank, yes. So they were willing to basically what they call this is the credit default swap. All right. So it means basically हम आपको इतना पैसा अभी दे रहे हैं, अब आपका सिर दर्द नहीं है, it's not your headache to recover the loan, we'll recover the loan. All right. So the bank also wins because they're like, okay, we don't no longer have to worry about recovering the money. We've already got some money and now we can move on to giving out more loans. And then the institutions win because they paid an X amount and they're going to get 3x by recovering those loans. All right. So the banks got really shrewd, and they started giving out loans to every single person. They like someone with no collateral, no income got a loan. Anybody that asked for a fucking loan got a loan. And what happens when basically that happens? Every single person that's getting a loan, the home loan we're talking about, okay, so goes out and buys a house. And what basically happens when that happens? Every person and his brother are in the market for buying a house. So the house, the price of a house goes up astronomically. And then what happens is people are noticing, hey, you know what? My neighbor bought this house for $100,000 the last year, and he just sold it for $300,000. Those are amazing returns. Now I need to buy a house as an investment. All right. So now that person also goes in and secures a loan so that he can buy a house. All right. So this whole time, what's basically happening is that the housing prices keep going up. Every person gets a loan. All right. But then again, what's going to happen when that person isn't able to secure a buyer for that house, and that person has no collateral and no income? That person is going to start defaulting on the loan. Defaulting on the loan means you cannot pay your EMI. And since they're given a loan to every single person that asked for a loan, basically the whole housing market crashed, and along with it the stock market crashed. And the United States, not just the United States, because it happened in the United States and the United States is connected to the rest of the world, the whole world went into a recession. The whole world went into a recession because a bunch of bankers in the US were greedy, all right? And because they gave out loans to every single person that asked for it, and then just, shifted the risk of collecting that loan onto someone else. All right. So this is again, so I think by now you guys see like a common pattern of all the bubbles that we discussed. Just repeating myself, what basically happens is that some bullshit thing some bullshit thing is being bid up in prices to an unsustainable level. And because the prices are rising so rapidly, everyone wants in on the game. All right. My friend made 10 times his money on Dogecoin, I want to buy Dogecoin now. All right. And so when these things happen, all right, and when everyone does it, and then when everyone tries to exit, that particular asset class crashes in price, and the whole thing ends in tears. And it sends again, yeah, actually, Ryan, uh, we discussed Greater Fool's Game earlier. So just for everyone who, since a lot of people have joined us just in the last 15 to 20 minutes, let me just repeat what the Greater Fool's Game is. So the Greater Fool's Game is, you buy something, all right, and you don't care about how valuable it is and if it actually is really valuable or not. You buy something just because you see it rising in price, and you buy something just to offload it to another idiot who's willing to pay a higher price for it, right? Like I buy, like for example, just take any hype stock. All right, let's talk about GameStop, AMC. All right, people are buying it right now. so that they can offload it to another idiot in the future who's willing to pay an even higher price for that stock. All right. So that's basically the greater fool's theory. When what you're buying is not really valuable, is not really an investment decision. Like you're not like, huh, okay, these it produces certain cash flows. It's going to make me this much money back in these many years. You're just like, okay, shit, this sucker's going up. I'm going to buy it. I'm going to pile in, and then I'm gonna sell it to someone who'll pay an even higher price for it. Okay, so that's basically the greater fool's game. And the greater fool's game is basically like, in it's attached at the hip with all bubbles basically. So all bubbles start like that again. So and this image basically is just speculating, like abhi aisa hua nahi hai, it hasn't happened, but then it's saying, is the bubble of the 2020s the high growth internet stocks, software stocks, bitcoin, SPACs, and all of these IPOs that are happening every other day. And remains to be seen. Remains to be seen. I actually like a lot of tech stocks, and some definitely are overvalued, but I don't think it's at bubble levels at this point. So yeah, so that's basically a short history of bubbles, euphoria, and market speculation. So I'll just, yeah, Umang, go ahead.
Yeah, I have a question that are there any mechanisms by which we can like measure the impact of these acid bubbles?
Sure, sure. That's a very good question. That's a very good question. So I'll tell you the story that Monish Pabrai talked about in one of his early interviews. So Monish Pabrai, famous value investor. All right. So Monish Pabrai in the 90s and 2000s, basically, he was um, he was taking a taxi ride in New York. And so like, he's just talking to taxi drivers, and they're like, life is good, you get a trading account, you trade on margin, and you just buy Cisco stock, and life is good. And that alarmed him a little bit. And then he went to New York again, and then he was talking to this Pakistani cab driver, and he asked him कि Cisco के बारे में आपका क्या ख्याल है. So Monish said, when basically barbers and taxi drivers are discussing, uh, oh, this stock is amazing, right? Let's buy this stock. I bought this stock. That's when you know that you're in trouble. All right, that's when you know that the conditions are ripe for another bubble. All right, so let me show you guys what was basically happening at that point of time. I'll present my screen. Okay, I'm already presenting my screen. Hold on. Yeah, so you guys see here. So this was, you guys see, this is where Monish Pabrai was talking to those taxi drivers. You guys see this? The price had been bid up. The price had been bid up to $79. All right. And Cisco stock has never returned to $79, just by the way. Okay. So this was when it was in the 90s to leading up to 2000, the year 2000. Basically, Cisco was the hype stock. What GameStop and AMC is today, like people are buying these hype stocks, also Tesla, all right, grossly overvalued. All right, so like those hypes, like these are the hype stocks of today's time. Cisco was the hype stock of that particular time. So people just piled in on Cisco. Everybody, like barbers, they told their mothers, their brothers, like, just buy Cisco and life will be good. Just buy Cisco, you'll double your money. So that was basically what was happening. And then in the year 2000, the bubble bursts, and boom, you're down to 13. All right, it was up at 70, and you can say it's back at 10. So let's say you put your life savings of $100,000. All right, again, it was up at 70. It was up at 70, and it's down to 10. All right, now you're left with close to $10,000. You basically have 1/7 of your life savings left. Like crazy destruction of capital. All right. Again, ended in tears. Okay, Himanshu has one question. How to sense that the bubble is gonna burst soon? Any other factors you noticed? Okay, so a lot of people uh, claim to be market timers. All right, like they think they know. These are basically people who call themselves momentum traders. All right, they think they can keep riding the highs, and they can also avoid the subsequent burst of the bubble. All right, and basically there is no one who does that, who's on the Forbes 400. Basically no one who does that is like phenomenally rich. And like if you just look at these charts, right? If you just look at these charts, just the prospect of basically 10xing your money in 2 years. All right, if a person knows how to do it, all right, a person knows how to 10x his money in 2 years, you can basically become the richest person in just a decade. You start with any amount of money. All right, let's say I start with 1 lakh. Okay, in 2 years that becomes 1 crore. In 2 years that becomes 100 crores. In 2 years that becomes, again, like basically in just 4 or 5 years, by year 6 or 7, I'm already the richest man in the world. All right, so no one knows how to time the market. No one knows how to ride the bubble and get out of it at the right time. Only God knows. No one knows. All right. Okay, so Kunal has one question. Do you have to sense the valuation of anything that seems like a bubble for correct predictions? Kunal, can you just ask your question so that I am not able to understand what you've written here?
No, I just want to ask, like, some people asked a question over here, like you want to have a sense of you need to get to know some factors about if a certain bubble is going to burst or not. So I just want to ask, is there I mean, do you need to have a natural valuation for the things that you see around you to actually recognize a bubble, as there might not be an actual mathematical representation of what is a bubble and what is not a bubble, because it is mostly uh, valued by the market as a whole.
Got it. Okay, so I'll try to answer that question based on what I understood from it. So I think Kunal is basically so what Kunal is asking is basically like are there some factors through which you can see a bubble forming? Is that what you're asking?
No, I'm just asking, like, is it more intrinsic, or is it more of a personal view of the market rather than any factors which helps you identify if it is a bubble or not? For example, um, um, if I feel that Bitcoin or the cryptocurrency, or let's say any of the new IPOs that are coming up, they are overvalued. Like if many people start thinking about that and it becomes a common sentiment, so that is when actually the bubble will burst, right?
Right. So I'll just take two examples. All right. So let's compare Cisco and Amazon. Okay. So Amazon, where it is today, all right, is completely grounded in reality. All right. So anyone would jump at the opportunity of making a 200,000 times percent 200,000% return on their initial investment. All right. So where Amazon is today is completely grounded in reality. It actually has that business. It actually has that distribution. All right. So and then also we can look at the PE. The PE is only 60. All right, and we can compare that we can compare that to something like, and it's very reasonable. There are companies trading at a 1000 PE, all right, that have no prospects of ever earning a dime. All right, that's pure speculation. So basically there are two things that basically happen. All right, one, people speculate. Two, people invest. All right, so let's say you want to buy a farm, right? So if you want to buy a farm, right? You want to buy a farm from, say, Umang. Umang owns a farm. All right. So before you buy the farm, before let's say Umang tells you that the farm is for the farm's acreage is this much, and I'm selling my farm for 20 crores. All right. So hopefully, like if you're sensible, before paying him the 20 crores, you will ask him how much revenue does his farm generate. All right. And let's say his farm makes about 1 crore a year. That's a good investment. All right. That's a good investment. So, but then if 50% Sundarbans discount, please. Okay. So, but if his farm, he tells you actually the reality is that my farm earns only 10 lakhs per year, and it's actually declining. All right, actually you can say whatever, for whatever reasons, the income is actually declining. You shouldn't pay 20 crores for it. You shouldn't pay 20 crores for it. Okay. So what basically happens in all of these events is that there is something, sometimes something completely bullshit, sometimes something actually good, sometimes something that presents a promise but will actually never get there. All of these things can be there. And then people think that the future for this security asset class is very, very bright. They think, Arey ha, like this thing's going to pull me out of poverty, or this thing's gonna make me an overnight millionaire. That's basically when the problem arises. And the thing is, making money is not that easy. All right. And if everybody can get rich from a stock tip they heard on the bus, it's pretty paradoxical. Everybody cannot be rich, right? If all of us heard, okay, you know what, uh, Tesla is an amazing stock, let's all go pile in on Tesla right now. Yeah, we if everyone in the world bought Tesla, all right, although it's already grossly overvalued, let's take another example. Let's just talk about Amazon stock only. Okay, it's trading at a 60 p, which means if you bought the company right now, if it keeps earning what it's earning today, you would break even in 60 years. That's a very good multiple, all right, for a great company. If everyone in the world today started buying Amazon stock, its price would again skyrocket to unsustainable levels. It would trade at like a 1000 PE, and it would crash. It would inevitably crash. Okay. So the thing is that basically, when everyone wants to pile in to get action on something, that's basically when a bubble is brewing, and in the future that bubble eventually bursts and the whole thing ends in tears. So that's basically what happens. Okay, Umang says, meanwhile college students investing in Dogecoin and talking about earning crores. Yeah, so basically, when people see, yeah, एक year का return is 100x, people are like, shit, I want to buy Dogecoin. But the thing is that I think 20% of all Dogecoin is owned by whales, and if a whale takes an exit, the price tanks. All right, and those people, trust me, those people eventually will take an exit. So yeah. uh Okay, so any questions regarding bubbles, anything like that? NFT. Okay, sure. We can discuss NFTs. Okay, so NFTs are basically a way to authenticate ownership of art using blockchain. All right. Bitcoin is based on the blockchain technology, and again, uh, just the authentication of ownership of art is when it's like of anything mostly digital. Yeah, basically anything is art, right? So basically Jack Dorsey sold his tweets as NFTs. All right. So and I think Elon Musk tried to sell an NFT song, and then he backed out. He's like, I'm already the world's richest person, I shouldn't probably do this, shouldn't try to profit off of NFTs. So yeah. Okay, what do you think will session come in what? What do you think? Will recession come in the coming years? Uh, the answer is no one knows. No one knows. No one knows. Anybody who knows when a recession is coming can profit tremendously from it. Actually, let me talk about one trade that Bill Ackman did. Bill Ackman, famous value investor, when he heard about the COVID-19 pandemic, when the news just came out, and the ripples hadn't yet reached the stock market, he bought puts of credit default swaps on the S&P 500 companies, and it's already been described as the greatest trade of all time. He put $27 million in, which is like a very small amount for his $14 billion fund. All right, very small fraction of his $14 billion fund he put in, and he turned that into $2.4 billion in just 3 months. That's called the greatest trade of all time. So yeah, like, if you can anticipate, if you know, next time a pandemic is coming, next time you hear, okay, there's this virus in let's say Kerala, right? That's going to take over the world, and it already is. Like, you can take like a small bet, and then the thing with options is that you can make 100x 1000x on your money. And then, like, since you're risking a very small amount of your capital, you don't even need to worry about losing your capital. So yeah, options are dangerous, but yeah, nobody has foreknowledge of a recession ever. All right, anybody who, if there was somebody who had foreknowledge of recessions, that person would again become the richest person in the world. And there are corrections of 10 to 20% every 5 years. There are corrections of 50% every 10 years. And then there are recessions which are, like, even more than that. You can say every 20 years. That's roughly been the pattern. But then again, you cannot form like a pattern. Okay, कि अभी हुआ तो अब से 20 साल बाद होगा. Not necessary. It can happen sooner or later. So you take an economy like the Australian economy, never had a recession in 30 years. Like, never had a recession in 30 years. That has not happened in any country in the world. All right. So like, again, it's a little dangerous to make patterns like that, again, because what we're doing is we're modeling reality, and reality is complex and messy, and nobody can really know, because at any given point of time there are millions of factors. What one single person did in in a bank sitting in the United States sent ripples across the world, and the entire world faced a recession in 2008. All right. So lots of actors, lots of people doing lots of different things, which can lead to many different outcomes. So no one knows when a recession is coming. Okay, this thing, again, I'll repeat myself, this thing is called market timing, and you should stay away from it. Yeah. Why are people buying NFTs? Okay, Himanshu, why do people buy Leonardo da Vinci paintings? Same reason.
Yeah, like, is there any future of NFTs?
Yeah, bro, no one knows. Basically, the thing is, it could become the standard for the art industry in the future, because uh, earlier, what used to happen was that there used to be a certificate of ownership. Like, if you're at an auction house like Sotheby's, you're given a certificate of ownership and a certificate of authenticity. Like, okay, this person is the owner of the Mona Lisa by Leonardo da Vinci now. All right. And what the NFT basically does is, it's a smart contract to show this person is the owner of this particular piece of art. All right. So again, the NFT market is, again, for the most part, I'll let you guys in on a secret. The entire art industry is basically like glorified tax evasion. All right. Rich people buy really expensive paintings, and they're not they just bid up their prices, and that can be donated to institutions, and then those can be gotten as tax write-offs. All right, let's say, for example, there's a certain painting, a Degas painting, on the market for $10 million. I buy it, I put it on Sotheby's auction house, and using my connections, I bid the price up all the way to $40 million. All right. and then what I do is I donate that to a museum, and now I get a tax write-off. So that's the main reason. All right, aside from some people are really passionate about art, some rich people are really passionate about art, that's why they do it. Most people do it just for tax write-offs. All right, so NFTs could become the standard for the art industry in the future. And but yeah, again, it's pure speculation. There is no particular reason, there is no particular reason why a certain NFT should sell for $1 million and why a certain NFT should sell for $50,000. Okay, so there's no way you can value an NFT. It's very subjective. It's in the person's mind. Okay. All right, any other questions? To convert black money to white money, to basically convert white money as a tax write-off, basically. Okay. All right. So thank you for attending this session. Now, what we're basically going to do is we're going to dive into our old discussion. This discussion we're basically going to have every single time. Okay. Because I love discussing great companies, and great companies are very few, and great companies identified can be amazing long-term compounders. Okay, so last time Kunal told us about this great mental model, which is basically basically the companies that sell products that are industry standards are actually really good companies, especially if they're software companies. So we discussed Adobe, and then we also discussed Autodesk. I checked the returns. Amazing company, really amazing long-term compounder. And okay, so I think all of you can take turns and one by one tell me what your favorite company is. I'll just lay out the criteria once again. The criteria is: one, it has a brand; two, it's able to raise its prices without losing customers or losing sleep; number three, people are willing to pay for its product more than the competition. All right. And okay, Nvidia. Hmm. I think Nvidia in the GPU market is basically competing with another company, right? What's the company's name? AMD. Yes, yes. So I think gamers में वो पूरा वो divide हो जाता है. I am team AMD, I am team Nvidia, like team green, team red, right? Like that. Okay, okay.
But as far as I know, NVIDIA is like the industry standard for AI and all of that stuff. For
Yes, yes. You're right. You're
so
right.
that's why NVIDIA has that upper edge.
Right, right, right. I've been meaning to understand Nvidia's business for a long time. So I think one of their I think their primary source of income is basically the GPUs that they sell and the data centers business that they have. And I think I looked at Nvidia's stock. Amazing long-term compounder.
It's not just basic GPUs. Also, NVIDIA even sells to what do you say, auto driving cars and stuff like that because they need to do graphical processing.
Right.
So even Tesla's and Google's Waymo uses NVIDIA
Nvidia.
chipsets.
Right. And as the world becomes as the world's cars become autopilot cars, these chips are going to be sold a lot. And then also, I think in the past few months, due to the chip shortage and also because Ethereum miners are piling up on GPUs, their sales have basically skyrocketed, and they're able to charge a premium for their GPUs. Amazing company, amazing long term compounder, amazing. Okay, Nvidia is definitely one of these great companies. I don't fully claim to understand its business. I'll definitely we can talk about. We were in fact thinking of discussing the cloud business. So I think on our discussion about the cloud business, we can also talk about Nvidia since it kind of also delves in that realm. Okay, dude, Yes Bank, what the fuck, bro? you, Yes Bank. Okay, Lint. Okay, Is Lint? What company owns Lint? Let's see. Lint. And is it even a publicly traded company? Okay, all right. It's a publicly traded company. Let's see. Lint. Hmm. Wow, trading at a 70p. Wow. Hmm. Hmm. It's nice. It's nice. I mean, almost double your money in 5 years. Pretty good. Pretty good. I don't fully understand Lint's business. Like, how deep is like Lint's moat? Do you guys would you guys pay 400 rupees for like a Lint chocolate? I have once, but only once. Not more than that. Yes, Kunal will. Okay, just to show off hands, does anyone here consume Lint's products? Okay, okay. So quite a few. So can you guys talk about like what you like about the product, why you pay extra for it? Any of you, Kunal, Sanjeev, Brian, any of you can talk about. Okay.
For me, if I would like to speak about why I prefer lint, or why I would rather buy lint, is um, it is more related to, let's say, the hype of a certain area's chocolate. For example, some people prefer Dutch chocolates, or some would say I like Swiss chocolates or something like that. So
Hmm.
when let's say you buy Nestle chocolates, Nestle I think is Switzerland, right?
Yeah, yeah.
So yes, so but they are a
Mass market.
low. Yes, yes, they are a mass market chocolate something. So for something like this, I can only say once you try it, you'll know that there is a certain taste difference. Like if you try Cadbury, which does not actually belong to any certain region's chocolate, like they would sweeten it to any height that they want. They would put Oreos in the chocolates or something like that. They would experiment a lot. But for something like Lind, they are very conventional in their business. They just stick to the basics of the most basic chocolates of fruit and nut and almonds and plain chocolate, dark chocolate, and something like that. So they just bank on the fact that they are a Swiss chocolate company, and then portray themselves as a premium brand, just like many other, let's say, a fashion brand would do, or any other luxury brand would do. So they just portray themselves as a luxury brand from the area where other chocolates are also distributed as mass markets, but they sort of keep that upper hand when marketing themselves. So I think that's what makes them sell their chocolates to me. Thank you.
That's a very good point. So they're basically capitalizing off of basically the name that Swiss chocolates have in the market, right? People know, okay, like Belgian chocolate, Swiss chocolates. So like these are like famous, like people say, like for example, people say Italian cheese or like French wines, like just like that. People talk about Swiss chocolates or Belgian chocolates. So I think yeah, that's a very good insight. So yeah, just because it's like it's able to it's already got the Switzerland thing going for it. It can market itself as a luxury brand, like because already the Swiss chocolates have a good name in the market. That's a pretty good insight.
Yeah, but the chocolate is also different in like terms. If you check, you will get candy, you will get bars. Like,
Okay, go
yeah,
on.
but this one, right? It's like outer shell is hard and the inner one is
We can't hear you, Ryan. Ryan, you still with us? Okay, I think we've lost Ryan. Rest in peace. No, just kidding. Okay. Yeah, so I think they've definitely got that going for them. And dude, Dell Dell is not a good example. Dell is not a good example because it's in constant competition with other Windows laptop manufacturers like Lenovo and HP. All right. Umang has something to say. Go ahead.
Yeah, check Tata Alexi. It's a good
What
stock.
what is Tata Alexi? What does it make?
Like it's in the software and hardware industry. It's integrated development, system integration and support.
Okay, something like a TCS.
Yeah, can say.
Okay, so I mean, I'll just expect you guys in the future to know what company you're talking about. Don't just look at the history of a company's like graph and be like, okay, this is a great company. Like actually, like it would be best if you actually consume the products of that company. So that leads to better insights. Okay, Dell is not a good example because it's always in competition with other brands. Okay, Chrome Hearts. I don't know what Chrome Hearts is. Supreme, bro. This thing with Supreme is it's a hype brand. Luxury brands do really well. Luxury brands do really well. They have amazing margins, and LVMH is actually one of the biggest companies in the world. I think we also talked about him previously. Bernard Arnault is like the third richest man in the world. So like Louis Vuitton, Moet Hennessy is like the holding company for a lot of luxury brands around the world. And yeah, they're very very rich, very very rich. Okay, what's Parag Milk, man? Okay, like also explain your thesis. Why? Okay, what were okay? Let's just go back to the criteria that I laid out. Okay, one, it has a brand. Okay, two, people are willing to pay a higher price than the competition for its product. Okay, so like Parag Milk, I am assuming is like a milk company. यार यहाँ पे अमूल भी सेम प्राइस है, मदर डेयरी भी सेम प्राइस है, और जिसने भी ज्यादा प्राइस चार्ज सेम करना शुरू किया उसका प्रोडक्ट लोग लेना बंद कर देंगे. ओके, सो ऑल ऑफ देम आर द सेम प्राइस. Okay, so you want a company for whose products people are willing to pay the extra price. Again, I'll just dish out the classic examples: Apple and Starbucks. Okay, so these are good examples. Okay, Titan. I don't know about Titan, but I do know that its 10-year graph is amazing. Went from double digit rupees to like four digit rupees in stock price. So I know Titan has had an amazing record. But do you want to explain your Titan thesis, Utkarsh? Sahana Sharma wants to join us. So what's your thesis, Utkarsh? Would you pay extra for a Titan watch compared to another company's watch? No, right? I think instead you might want to pay extra. You want to pay up. You might want to pay up for a Casio G-Shock. So you're saying you'd pay up for a Titan watch compared to another company's watch. What are you saying, bro? Again, like the watch market, I don't fully understand. So but I do know like Titan has had an amazing run, but I'm not sure it fits our criteria of a company with a moat. All right. Okay, let's talk about other let's talk about okay, somebody mentioned Bajaj Finance. Bajaj Finance has had a great run. I know. I've seen the graph earlier. Amazing company, but ITC. Let's talk about ITC. Okay, since somebody brought it up. ITC has tried so hard, so hard over the years to diversify into other businesses, hotels, stationery, FMCG products. Okay, basically trying to come up with every single thing that Unilever has. Okay, but 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 80% of all of its money still comes through cigarettes. Okay, and its hotel business is not even profitable. Okay. So there is one business pulling the weight of all of the other businesses. So you know what? If they actually ever spun off ITC, okay, like the cigarette business into another company, I would buy that stock, but not ITC as it's currently being reported. Like one business carrying the weight of other businesses, not that great. I don't understand Bajaj Finance well enough to invest in it, but if you want to talk about Bajaj Finance, tell me about it. Okay, MI. Bro, the thing with MI is that they're the lowest cost producer. I'm talking about companies where people would pay extra for their product, not buy their cheapest product. Although good company, it has very low margins. It has 5 to 15% margins. Compare that to an Apple, which has a 66% margin on the phone. Okay, Bajaj is great. ITC too. Intuitive Surgical. What is Intuitive Surgical?
They sell robotic surgical, what do you say?
Equipment to hospital.
Equipment, yeah.
Intuitive Surgical. Yeah, looks like a great company. We can definitely look into it. Amazing, amazing. I'm gonna add that to my list. Intuitive Surgical. Yeah, Terry Smith actually has a few similar companies like a Brown Foreman, a few other companies that basically supply parts to the hospital industry. There's another company that he owned that he said that basically every single syringe that basically is used in Europe is basically made by that company. So like a very interesting industry, very interesting industry. I'll definitely add it to my watch list. This company, I'll have a look at it. Okay. So far, I think with in this session we've identified Lint, and Nvidia Lint and Intuitive Surgical. Seems like a good business. Again, like a lot of these obscure companies that people don't know about. There's also the company that makes Invisalign. What's its name? I don't know. Let's see. Invisalign. Yeah, it's Align Technologies. Amazing, amazing, amazing. Look at that. Look at that. Amazing. Like 600% returns in just 5 years. Joel Greenblatt invested in this business and he made a killing. So like a lot of these like really obscure companies, even especially in the medical industry, that basically the average person does not know about, right? Like for example, every fucking person knows about Amazon, right? Every fucking person knows about Microsoft. All right, you're not going to, you can, but like when the whole world knows about the stock, the probability of making a killing on that stock is very low. The Where you basically make a killing is when no one knows about it, and you invest in it, and then the market later on comes to recognize it, like wow, this company is just blowing everyone out of the park. So yeah, the Invisalign company is still going great even though their patent has expired. Now the main bread and butter came from those braces, those invisible like braces, right? So they had a patent on that technology, and that patent is now expired. Now anyone can do it, but even right now it's still going strong because everyone's like they've branded themselves so well that everyone just says, nobody says give me invisible braces, everyone says give me Invisalign, right? Anybody who wants to get it. So yeah, thanks for reminding me of this great company on my watch list. Okay, Abbott. Okay, what does Abbott do, Ryan? Bro, we can't hear you, Ryan. Should Rolls Royce include? The auto sector is really hard. Only Ferrari makes money in Rolls Royce actually does has a lot. Rolls Royce has a lot of businesses. Rolls Royce is in the airplane business. Rolls Royce is in the defense sector. So Rolls Royce actually has a lot of businesses. Let me most probably it's a fucking privately held company, but let's see if it has a stock. Most probably not. Most probably it's not gonna have a stock. It does. It does. Okay, let's see. Not so great. Not so great. And it's trading at a PE of 2.8, which basically means it must have crazy debt. Must have crazy debt. It's a very very low PE, like a 3 PE, which basically means that if you bought the company today, you would break even in 3 years, and which means this company is saddled with debt. Hmm, interesting. Okay, so we'll cross this one off. Yes. Okay. It does poor test. What is Abbott? Can someone tell me what Abbott is? I don't know what Abbott is. Uh, okay. It's a it's a biomedical company. Tough business, tough business. You have to spend billions in research, and then you have to make it go through FDA testing. And basically, of all the billions you've poured into research, one product comes out of it. Basically 1% of the products are actually useful, and then of those that have to be reviewed by the regulators, only 1% actually turn into commercially viable businesses. So I stay away from biomedical, biotech. Very very hard business to compete, and very capital intensive, and you can get wiped out. So we'll leave out Abbott for now. But yeah, if somebody has another good thesis for it, they can let me know. Disney is an amazing company. Disney is amazing. Disney is amazing. Also, they've come out with Disney Plus, which is like a direct competition to Netflix. So now they not only own the content, they also own the distribution, which is amazing. Trading at a P of 300, like crazy. People are expecting like crazy return for this company. Amazing, amazing. Disney, obviously, one of the all-time greats. Amazing company. TSMC, yes, yes. TSMC is a great company. Yes, TSMC. TSMC is a great company. Yes. Hmm. Okay. Any more ideas from you guys? Any more industry standard? I think Invisalign also becomes somewhat of an industry standard. Like in this case, like if people want invisible braces, it sort of becomes like the industry standard. So I think that's pretty good. Is there anyone who works over here? Somebody who's not in college anymore. Somebody who's working. Okay, all students, I guess. Yes, Kunal, go ahead. Yes, Kunal.
And no, I just wanted to say I work like a student and working both
Yes,
in
sir.
sort of that
So
sense.
so since you work, tell us what products does your company pay for? Like, what do you buy?
We invest. We usually buy, let's say, cloud services. We pay for Google Cloud Platform.
Google Cloud.
Um,
Amazing.
yes,
Google is
Google.
obviously an amazing company. Yes,
So
yes. Amazing.
so because it fits into our stack and all, so we pay for that. We usually mostly pay for the major part of our spending also goes into IT parts and making best systems available for our own development.
Okay. Who do you buy from?
Software development, etc. So like we discussed Nvidia, so we are always looking for good graphic cards and all.
Okay.
So good software and good systems in that sense, and cloud platforms, I would say. The other thing that we spend is in logistics. We spend in packaging, we spend in marketing, advertising, sort of that thing. So if you're talking about it as an industry, so for marketing or advertising, we give money to Facebook. Yes,
Facebook.
so Facebook, so in that sense. And when it comes to packaging materials and as such, so I would say for we give a major part to printing also. So companies like Vistaprint get a lot of our orders. So for that thing, and the so for packaging materials, there is no such one standard company, I would say. It is all scattered. So whatever startups come up in India, and for logistics, I would say it is mostly dominated by Blue Dart, DHL, uh, FedEx, sort of those companies.
Great
So
examples. Great examples.
okay.
Blue Dart. Blue Dart is a great company. Yes. What the fuck? What the fuck happened from here to here? What the fuck happened in 2015 that made its stock crash? But yeah, Blue Dart is a great company because in India people use Blue Dart a lot. DHL is, I think, a European company. You can also look at that.
They are the direct competitors for Blue Dart. No, I think okay. So they are the Indian service providers for DHL only, and they compete with FedEx. They both of them together compete with FedEx in India. So
Hmm.
that is one thing, and there is a new one, I think, but the thing, but they don't have an IPO yet. Delivery is also one logistics provider in India.
Yeah, I think Delivery is coming out with an IPO, right?
Yes, yes, I think so. Yes.
Have you used Delivery's services yet?
No, no, but I have received things with delivery because they are not heavy logistics providers. I think they are more into your consumer thing. So like delivery currently to us is as useful as giving our parcel or giving anything to any normal person and sending it through Indigo Cargo or something. So if Indigo Cargo has a separate company, then I would say you can check that as well, because it is the major provider for small logistics providers. For example, delivery can't afford a plane on its own, so they would use Indigo's cargo plane.
Indigo, Indigo Cargo.
Sort of that thing. So logistics is also one space.
Hmm. I've only ever used FedEx's services and that too at my previous job, where we used to ship out. It was a design studio, so we used to ship out ceramic sculptures, and yeah, FedEx is actually pretty convenient. And yeah, whenever you've got like a trustable known name in the market, people tend to switch to them. And yeah, okay, we have Red Digital Cinema. What's Red Digital Cinema?
They manufacture high resolution cameras for film and TV industry,
Okay,
and they are the de facto standard after Sony.
okay, all
Yeah,
right, okay.
and a lot of their media cards and all of that are proprietary, so you can't use what do you say, generic media storage and things like that.
Let's see. We have a stock.
No, it's private. It's private. I
Right.
searched.
Private company. Okay, but good example. Good example. Thank you, Sanjeev. Okay, Hero Moto Corp. यार, would you pay extra for a Hero ki bike if a Bajaj ki bike cost less? No, right?
Nah, it's a good stock. बस ये बता रहा था
Good. Okay.
for long term.
अभी तो वैसे भी there is so much competition in the automotive industry, right? Like every automobile company in the world is struggling to make ends meet for the last decade, basically. Like that's been the case. Yes, Kunal.
I just when Red Digital was brought up in cameras, I thought about searching for GoPro, but it seems to be a counter example. I don't know. You can tell your analysis on it, because GoPro is the standard for any sort of portable cameras nowadays, but still they have a negative 77% return all time. So I
Yeah.
don't think what's with
Uh,
the GoPro stuff.
what happened with GoPro is people had extremely high expectations when it IPO'd, and it couldn't live up to the expectations.
Correct. Exactly correct. I've heard of this story too. And basically, since GoPro was like a VC funded company from the beginning, you know how much euphoria there is in Silicon Valley, right? They think, oh, this company went 10x. Oh, this company is also going to go 100x. This company is also going to go 1000x. And you know, there's a limit. There's a realistic limit to how much a company can grow. And yeah, so it's also trading like at a PE of 27, which means like this is like a reasonable वैल्यूएशन तो अगर वो जब वो यहाँ पे थी जब वो यहाँ पे थी तो that's obviously like a 270 PE. So that's like the market was giving it a very very rich valuation. So yeah, clearly it couldn't live up to those expectations. So the thing is कि अगर अगर आपने already उन expectations के साथ अपना अपना price public किया है तो obviously वो होगा. Whereas in fact, if they'd taken their stock public at let's say $4, it would have been like an upward graph only from $4 to $9, like $4 to basically $10. So it would have been like an upward graph only if only they'd been reasonable with their expectations. So again, they started at the wrong price, and I think it can become a very nice turnaround story in the future. Like it starts here. Again, another important thing that happened with GoPro was that back in the day cameras weren't so good that you know like you could for the rugged traveling and like you know basically if you want to like basically if you're on a trek and you want to take a camera along with you. So and also the main thing is that these days basically iPhones have changed the game. iPhones are basically their cameras are as good as film cameras at this point. So you know that also you know takes from their demand, although their demand among the outdoorsy people is very much there, like you know people who surf, people who do all sorts of those things, they definitely buy their products. But also that brings me to a very important example. You guys know about this chain called Toys R Us? Let's see if they're still.
Yes.
So Toys R Us, let's see, it's if so basically what basically happened was, yeah, it's gone bankrupt basically. So this company basically like let's try to find its historical. Hold on. Uh, Start. Let's see if we can find it on. Let's see. So basically what happened with this company was it faced a basic that's not it. That's like an Australian subsidiary that's still listed. But let's look at it. What basically happened was it basically saw a regime change. All right, it saw a regime change. This company was amazing. It gave tremendous returns to its shareholders. The company was, I think a 100 bagger. But then what happened was that, okay, what are you basically selling in a Toys R Us? You're basically selling toys, and basically when the iPad came along, people, instead of buying their kids all of these different toys, they just gave their kids iPad. That was like the regime change in America. Like people started, instead of buying 10 different toys for their children, they just gave their kids an iPad. हाँ इसमें कोई भी ऐप डाल लो, वही गेम खेल लो, and the kid is sorted completely. And that basically destroyed that destroyed Toys R Us. All right. Another example is Radio Shack, another 100 bagger. Great company, great company. And what basically happened was, what does Radio Shack actually sell? Radio Shack sells uh, radios, lights, cameras, and what basically happened by the late 2000s was all of that is in your pocket. All of those things that Radio Shack is selling is in your pocket in the form of a phone. Destroyed. The company is gone. Destroyed. So yeah, these things happen. You gotta be careful about these things. So Sanjeev raised his hand. Sanjeev wants to say something.
You were mentioning VC and unrealistic expectations, so I just wanted to sort of mention. Do you know about the story of Juicero?
Juicero, I'm not aware. Tell
I'll
me.
just type it into the chat box. So
Okay.
basically, it was a startup that was founded, I think, in the Silicon Valley itself, and they designed a machine that would create fresh juices out of single serving packets. And it got insane valuation. I don't think it went public, but it got insane amount of funding. And the company fell after somebody on YouTube uploaded a video on how if you manually squeeze the juice packet, you would get more juice than the expensive juicing machine. So after that video got released, the company died and lost all of its funding.
Okay, that's very interesting. That's very interesting. Yeah, it's like it can sometimes be like something as small as a YouTube video that takes down an entire well capitalized VC backed Silicon Valley business. So like crazy things can happen. Yeah, that's crazy. So someone else was saying something. Yeah, okay. So just going back to that. So again, amazing companies can also get destroyed when basically times change and those companies aren't able to evolve with times. And it's not just even about evolving with time. Sometimes there is no evolution with the time. Like for Toys R Us, there is no evolution with time. There is nobody's like going into a Toys R Us anymore. So that's the thing. Kodak, classic example. Kodak was the company that actually invented the digital camera. But 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 they said fuck the digital camera. Their business executives were so stupid. They basically made their money from selling the films of cameras, selling cameras, and also the development process. You guys remember back in the day, you had to put the images in like a black liquid in like a red lighted room, and that's how images were developed. Okay, so that's how Kodak made most of its money. I still have some Kodak album photos from my childhood, and Kodak was a rich company, and their research guys came up with the digital camera, and the business guys are like, no, fuck that, because with the digital camera we're going to earn close to like one hundredth of what we're earning right now. Why should we kill ourselves? And then Steve Jobs has a very interesting quote. You know what Steve Jobs says? Steve Jobs says, it's better to cannibalize yourself than someone else come eat you. All right. So if you found something that eats yourself, you got to go ahead and do it first. So these guys, idiots, sat on their asses, and then Sony, Canon, all of these Japanese companies, Nikon, came in and killed them. Like Kodak, is it even a listed stock anymore? Let's see. Yes, it is listed. No PE means no earnings, unprofitable. Look at that. And it only went public in 2013. It only went public in 2013. Okay. Maybe it was public before, then it went private and it came back again. But yeah, destroyed. And I wonder what their core business is now and how they earn money today. But yeah, crazy. These things can happen. Yeah. Nice. Amazing talk. All right. So anyone has any more examples of great companies or great companies, the fall of great companies, former great companies? Okay, so amazing discussion, guys. I'm really tired. I think we'll end this here today. Yeah. Is everyone cool by that?
Yeah. And exactly.
Okay, cool. Thank you for joining us. Uh, thank
So
you for
yeah,
all
are we
your.
going to continue this? Hey,
Yeah, hi Mahesh. Yes, Mahesh has something to say.
so I was asking that, like, are we going to continue this type of sessions? Like,
Oh yeah. We're doing this every weekend actually.
weekend, Saturday, Sunday, or only Sunday?
Saturday को भी कर सकते हैं. If you guys want to do it on a Saturday, you can do it on a Saturday.
Sunday is good. Sunday is good.
Yeah, Sunday is cool. Also.
Yeah, so same time again on Sunday. So we're going to do it like every week. So our whole reasoning for conducting these sessions is that we're trying to basically look for long-term compounders, companies that have amazing runways ahead of them, and companies that are basically the industry standard, or or a company that has a product that people are willing to pay extra for. These are the kind of companies that we're basically looking for, companies with moats basically. So yeah, again, like next week we'll have one main topic, and then after that main topic again we're going to discuss amazing companies. All right, thank you so much for attending the session, guys. Lots of great ideas. Thank you to everyone who gave great ideas and their inputs. uh, yeah, so I think we'll end this here right now. I'm going to stop recording. Thank you. Thank you.